Hello everyone and welcome to another R&R Partners video. My name is Remus and today we are going to discuss the procedure of obtaining the Romanian tax residency and also its implications. If you are new to the channel and you consider either emigrating to Romania or opening a company in Romania, do consider subscribing to our channel as we post new and updated content twice per month. So according to the international treaties that most countries signed, in order to be considered a tax resident in one country, you should live in that country for more than 183 days within a year. Now, I know that there are some particular states in which if you declare that you do not live for more than 183 days, they will just consider you as a non-fiscal resident and that's how you will proceed from there on. However, Romania is quite particular in a way that even if you do not live for the 183 days in Romania, you can still be considered a Romanian tax resident if you have your vital interests in Romania. Regarding the term of vital interest, the law perceives it as being either your family, the place or the state in which you have your family, your spouse, your children. Also, vital interest can be linked to your possessions, so it may refer to the place where you have most of your houses, your cars, or where you keep most of your economies, where you have a retirement fund. Last but not least, this may also refer to your legal documents, the place where you declare that you have your domicile, the country in which you have your driver's license issued by, and so on. If you are in a situation in which you do not know how to proceed, either by how to declare your tax residency in Romania or the fact that you left and you should either be considered a Romanian tax resident from a date onwards, do note that our office offers tailored advice to you, so you can book a consultation in the link down below and you can appoint a 1-hour consultation with one of our experts. Now that we have the basics of what determines your fiscal residency to be either in Romania or in another state, the next thing we can discuss would be the effects of having a Romanian tax residency. So the primary effect that you need to take into consideration is that you will need to declare all your streams of income in Romania. So if you're having any income from abroad, for example from your home country, you need to come and declare it in Romania and state that, look, I am getting money from that country and I pay some taxes in that country. So the main effect of the Romanian tax residency will be that you need to declare all your income in Romania and all the taxes that you paid in other states for that income in Romania. The main taxation mechanism that is in place in Romania and most of the countries is called tax credit. So you will need to declare in Romania the gross income that you have from abroad, and also you will need to declare in Romania the taxes that you paid for that income. So basically there are two situations in which you can end up. First would be that you pay no additional taxes in Romania, and the second would be that you pay some additional taxes in Romania. In order to not pay any additional taxes in Romania means that the tax bracket in Romania is lower than what you paid abroad. So you'll not own anything to the Romanian state. The second option would be to pay additional taxes in Romania. That would mean that Romania has a high tax bracket on that source of income and you paid a low tax bracket on the income that you had from abroad. So in Romania you would pay just the difference between the two taxes. Now that's a general rule and we all know that there are exceptions to the rules and we love them. The first exception would be that Romania has a no tax policy on the income that you get from abroad with the other state. So that would mean that if you are, for example, receiving income from salaries in that state and you also worked in that state physically, In Romania, you do not need to pay any additional taxes. In this case, you just pay the taxes in that state, and if Romania has a higher bracket, you do not pay anything else to Romania, even if you're considered a Romanian tax resident. However, that's the best case scenario. There is also a worst case scenario in which, for example, Romania and the state from where you get the income does not have any tax treaties. The tax treaties usually are called a treaty for avoiding double taxation. So if there is no treaty in place between Romania and the state from which you are getting the money, then you just have to pay all the taxes in the country from which you receive the income, and you also need to pay all the taxes in Romania for the same income again. Fortunately, Romania did her best to have treaties for avoiding double taxation with most countries, and that is an utter exception to not have a tax treaty. So before thinking of coming to Romania or afterwards, please note that you should see the tax treaty, see the incomes that you have, and see what are your liabilities and how this will impact your finances and your financial goals. If you found this video useful for your particular situation, or if you want to help others out, please consider giving us a like down below, as it helps out the channel a lot and also helps other expats finding content about the tax residency and how to obtain it or how to declare it. As a last mention, if you want to hear more about us and what we do, we have also a Facebook page and an Instagram page where we post pretty much daily. So this is it, guys. You found out more about the tax residency in Romania, and until the next time, have a great day. Bye.